I'm Ben Weintraub. I'm here speaking on behalf of myself and Brendan Sanderson, who's my co-founder. We've been building together various protocols in DeFi for about 5 years together. And we've ran into quite a number of problems trying to facilitate what we think about as the crypto economy. So thus far, there have been a couple conversations about exchanges. We think about economy as not just exchange, but also currency. And from where we sit, the work on both currency and exchange as a more general concept, not just financial exchange, which is what's been talked about so far. In both areas, things are slow, let's call it, so far. And I'm sure a lot of us who are here still believe in the stuff that got us here, but so far the going has really been slow. And we've been trying to figure out what would it take to really accelerate the adoption of the crypto economy. What are the missing pieces that, if we can get right, have the potential to really blow up and accelerate the overall adoption of a full economy. So that's a little bit about our work, and we think about both currency and exchange. So I'm going to talk briefly about both of them. We think about currency historically. There's consensus that currency has utility, three primary different things, which I'm sure we're all generally familiar with, but store of value, unit of account, and medium of exchange. I want the ability to store value across space and time and then use that value that I've accumulated. I want to actually be able to buy and sell with that value constantly. That's medium of exchange. And then unit of account is a little bit more interesting and complex. So we'll maybe bifurcate unit of account as like how people want to think about their personal wealth is one way to think about it. Like Bitcoin at this point, that's how I'm sure most of us think about our wealth accumulation. So from that perspective, like a unit of how much do I have in my account, Bitcoin is really useful. But when it comes to a full economy, like borrowing and lending, my favorite example is like an ice cream shop owner. You can have the best ice cream and plan out your business exactly and do everything meticulously and sell exactly the number of scoops that you thought you were going to sell. But if the loan that you funded your business with is denominated in Bitcoin, you're fucked most of the time. And so this is ultimately not the way that we can build an entire economy. And so there's been this missing other half where Bitcoin has filled store of value and unit of account halfway, but there's a missing half, which is to facilitate loans, hyper-efficient loans, just like the US dollar system does, and to be a medium of exchange, just like the US dollar does. And so part of our background working in DeFi is we are the founders of Beanstalk, which quite famously, just over 3 years ago, got hacked on Easter Sunday. And 2 weeks after that, Terra went down. And many people sort of wrote that off as the end of the attempt to create an algo stable. And I think at this point we can all agree algorithmic stablecoins are not possible if you want hard stability. But if you're willing to compromise on perfect stability and work on just low volatility, we still believe deeply that there's the potential to create a new money to complement Bitcoin and serve as that other half of the unit of account and medium of exchange. So we, even after the hack, have continued working with a dozen or so other people that are very passionate about this. And just at the end of last year launched Pinto, which is a fork of the original Beanstalk. And we hope will reignite the conversation around creating a low volatility money that is network native, that does not compromise on censorship resistance or permissionlessness or trustlessness. Whereas if our whole economy, which right now it's like, why is everyone using USDC and USDT? We need a low volatility currency. I don't think we need stable coins. I think we can settle for something that has low enough volatility that it gets the job done, and then we can get back all of our principles. And Celestia has worked so hard to create their independent network that is aligned with these values of trustlessness and permissionlessness and censorship resistance, But if the economy that is built on Celestia is ultimately dependent on USDC or USDT, those companies are going to be effectively able to manage the social consensus of the system. So every system, if we're really serious about these values, we need some sort of medium of exchange and unit of account that can complement Bitcoin. And so a large part of our work to date is on this. And just want to shout out Pinto and those guys that have continued working and slogging away even after the hack. That project never took any VC funding or anything like that, so it's been quite a slog. But we still believe in that. Now, the other half of the puzzle, and there were really solid presentations this morning about exchange, but in particular just financial exchange. And this is where we want to maybe broaden our horizons and think about what would it look like for a Web3 competitor to Uber to actually outcompete that monopoly? What would it look like for a Web3 native competitor that is aligned with these values of trustlessness and permissionlessness and censorship resistance to outcompete Spotify or YouTube? How can this actually happen? And so we, having spent so much time working on the currency, ran into quite a number of problems with the existing stack, in particular with the EVM. And we looked around at other options and ultimately determined that we were going to have to do a lot of the work ourselves in order to create something that could actually underpin new network effects in new Web3 native businesses. And so as much work has happened in like generalized proving or generalized DA, right? Like these are fabulous products. People before were talking about Succinct. Celestia is hosting this fabulous event. These are areas of the stack that have gotten so much love and funding. And we look at the exchange area, and it's like, sure, there's been a lot of iteration on DeFi itself, but there has not been any attempt to go a layer deeper and create a platform for generalized exchange. And so the other half of our work over the past 3 years, we started just working on the currency and realized we really had to get our hands dirty on the exchange front as well. But the other half of our work is about exchange. And what we are working on is exactly what we say the crypto economy needs. We're working on a platform for highly competitive, completely generalized, and in our opinion, most important, private exchange. So if you want to match Uber rides, if you want to create a Web3 native competitor to Uber, ultimately, what do you want to focus on? You want to focus on creating the orders, what it would be for your rider or your driver to offer their services, and some sort of matching algorithm. And then you don't want to worry about anything else. You want private matching. Location data is obviously sensitive. So on our platform, we can imagine an Uber app being built where the only thing that the developer has to define from an exchange perspective is the actual orders and clearing, and then they can focus on building the best app. And from our perspective, perhaps the most important thing is about transcending the competition, which right now it's like, there are 100 local Uber competitors, if you will. And so our architecture doesn't have composability at the smart contract level, where it's like you now have to operate with a single smart contract and you have some network effect at the smart contract level. We're introducing something new, which is composability at the function level. And through composability at the function level, you don't necessarily have one Uber app. You sort of have a generalized infrastructure for rideshare where developers can marginally contribute like a better clearing algorithm or a better order type that can be more expressive. And so you no longer have like individual apps trying to build their own version of Uber. You have a network effect on the platform where individual developers can, with much lower friction than currently any of the developers here know. Like you want to take something that exists and iterate on it a little bit. It's a huge, huge, huge friction. In our architecture, you'll be able to write just one new function, push it, and then other users in the ecosystem can just upload to the latest function effectively. So this is a little bit how we're thinking about actually enabling the crypto economy. Half of it is currency and half of it is exchange. All of it is enabled by all of the hard work by all of the other parts of the stack. But this is our contribution. Thank you. So quite a big picture I was painting there. I figure, want to open up the floor for any FUD whatsoever.
So is this exchange platform, is it just just code, like open source code, or is it like deployed somewhere that everyone interacts with? Or because I imagine, if people want to use this for their app, but they want to build it on their own chain, they would deploy their own version of it. But I'm just curious how you see it.
Yeah, so what we're building leverages the Sovereign SDK. So effectively, developers can create their own chains, if you will, that facilitate particular exchange. So from where we sit, the only time that you need the same exchange, the same matching to happen on one machine is if there's some sort of reason to cross liquidity, if that makes sense. So for something like finance, you really do want everything getting cleared on the same machine. That's how you have the most efficient and the safest system. But for something like Uber, you don't want Uber rides in America or even LA and New York running on the same machine. That's totally inefficient. So from our perspective, it's like we wanted to create a platform that can sort of have horizontal scaling at the execution layer, but have some unified underlying financial or economic layer.
Following up on that, I totally agree that like exchanges and I guess like markets are pretty universal mechanism, but so I think some people in crypto have envisioned that like blockchains can enable us to build markets for like net new things. Are there any that you are most excited about, like blockchains enabling like new markets?
Okay, so this is a bit abstract because I think most of like the traditional assets or things that we think about are great, but it's like everyone knows about that stuff. One of the cool things that our architecture enables is what we're calling n-dimensionality, and particularly n-dimensional assets and n-dimensional orders. So when it comes to n-dimensional assets, which is your particular question, it's sort of like a generalized 1155, where instead of having one token that then has classes, if you will, you have a more abstract sense of just assets or items or objects within the system that have certain traits. And so you completely obfuscate any particular token, and now you move things to having traits. So if we think about data as an example, like we want to facilitate the exchange of data in a private capacity. If I'm looking to buy or rent data, right, to train a model in a T, so I don't actually get to see the data, but I get to use the data for my model, I want to lease data for, let's call it like white men with O blood type, age 24 to 34, living in New York City. Those are the only things that I care about for my order. But me, as a 27-year-old white man living in New York, I actually don't know my blood type, I may upload my data with a tremendous more amount of value, if that makes sense, like other traits. But when you're coming and bidding to lease my data to train your model, you don't care about the fact that I have all of this other stuff. You only care about these particular traits. And so it's like within the existing ERC-20, 721, 1155 architecture, you don't really have this ability to just pick and choose exactly what you want. That's one element of n-dimensionality that's important. We could get into a lot more of it, but I think that gets at like how we think about value. That data has value that has n dimensions. Every other dimension that you define the value on, potentially the overall value of the asset goes up. In some cases, it may go down, but that's a whole nother talk, if you will.
Cool, thank you.
During ETH Denver, Kay from Sasing and I, we were making a lot of jokes about people finally building roll-ups for Costco because the amount of wholesale trades that is happening there leaking so badly that basically you just price it in your annual shareholder reports. I'm wondering, the tech that you guys are presenting today, is it targeting basically those wholesalers to settle the books? Or like, no?
Well, at some level, the answer is yes. Okay. What we've designed is built around the thesis of this is the most efficient way to get everyone on a trustless, permissionless, censorship-resistant stack. But in terms of who do we envision using this to start, this is more app developers that want to facilitate new types of exchange in a Web3 setting. So that could be something like Uber or Spotify for rides or streams. It could be something like a data exchange, which there's a lot of talk about, but no sort of private data exchange really exists yet. Or it could be something more traditional, like just some clearing for shipping, let's call it. That's not where I get the most excited, but the more practical side of me feels really good about having support for that, if you will. So from a product perspective, we feel like this really enables new types of products that have the potential to accelerate user experience dramatically. Like, I don't know if people like the new Spotify update or not that just went out, but the point is, it's super wrong that from a user experience perspective, that's just pushed onto me. It doesn't make any sense that now there's some centralized provider that they're the ones controlling the interface between me and my access to the streams. So it's like ultimately, there may be some centralized provider that has ownership of rights to the streams that the platform has to do business with. But from a UX perspective, it's like all of that should be totally open and competitive. And so we've tried to create a platform that can actually sort of separate ownership of the value from iteration on how people experience interfacing with that value. Thank you very much.